Alrighty, traders, we are live. Are we? I hope so. Alrighty, let's go. Yes, we are. We are live. Yep. Alrighty, traders, we are live. Fantastic. What I want to do, guys, is welcome to today's little live session, guys. Today I'm going to be teaching you some things to really focus on when you're trading the markets, and how to actually find some good trading opportunities in the markets when you're trading the markets, and what I actually look for when I'm actually trading the markets. And that's what I want to share with you in today's session from there, guys. Make sure that very first thing in the description, go there, guys. I'm celebrating my son's birthday, or my son's birthday is coming up, and to a 95% off to my Inner Circle coaching program. That's 95% off there. That actually ends today, so make sure you go get access to that. So I want to share with you guys again some really good trading techniques and stuff like that, and some things you can use to actually help you when trading the markets. Plus I got some Q&A and just a whole bunch of fun here, right? It's a Sunday morning for me right now, and I am just so excited for when it comes to these markets and trading opportunities and stuff like that. Because, guys, the thing is that there is so many amazing trading opportunities out there. Once you know what to look for, guys, okay, once you know what to look for, then there's so many amazing trading opportunities out there. We just gotta understand exactly what we look for. And I'll just share with you an example as I'm getting started into today's session here. I was actually putting together a list of trades that I've taken, or actually I've got dozens and dozens and dozens of screenshots of trades that I've taken. But I want to share with you that for me personally, guys, yes, I am a coach, right? I'm a coach, yes, and I have a trading program and a coaching program, yes. But for me personally, I am a trader first and foremost, okay? I am a trader first and foremost for when it comes to trading these markets, all right? So I'm not just one of these people that just says, oh, come on down, join my coaching program, so on and so forth. My first job is a trader, right? When people ask me, what do I do for a living? I'm a trader. That's what I do for a living. And there's so many amazing, good trading opportunities out there that you could take advantage of. You've just got to understand some simple, basic analysis around the markets and how they work, and when some really good opportunities to actually get involved with these markets through there. And that's what I want to share with you today. But as you can see here right now, guys, like I'm showing you a PowerPoint right now. Here's some screenshots that I've taken. There's heaps and heaps of screenshots here. Right? They're different trades that I've taken in the past, right? S&P 500, this is a 5-minute chart here. This is just this is a Forex trade. Because for me personally, guys, the way that I trade the markets, and again, with that first thing in the description, that coaching program, I trade every market out there, or not every market, but I trade the US stock market, but I also trade the futures and Forex and commodity market, right? And I trade the smaller time frame charts. I trade the 5-minute charts, so on and so forth. The reason why is because when you know what to look for in a high quality setup, then that's my job, right? I just simply wait, and they all have very similar setups to that. And I can show you literally dozens and dozens and dozens of different trade examples that I've taken over the years that really resonate. And the reason I'm showing this, guys, is because, again, first and foremost, I'm a trader myself, right? I trade these markets for a living, and I understand the nature and the flows that actually happen when it comes to trading these markets. And there's all these different screenshots here, guys. And the reason why I put this together is I've actually put this together for my private clients, actually. Because I just like to do that there, right? So there's all these different trades here that I've taken, Forex and so on and so forth. And again, the purpose of me telling you this, guys, is that I have been trading the markets for a long time. Once you understand what goes into a good quality setup, guys, then you can start to really move forward in a big way in these markets, okay? Because the nature of these markets, really, they really operate this sort of similar same ways in the markets through there. So that's what I want to share with you today, guys. Again, I can show, there's here dozens and dozens and dozens and dozens of examples of trades that I've taken. These are examples going back to 2019, 2020, and so on and so forth. But there is many amazing opportunities out there, guys, that you can take advantage of. So just heaps and heaps and heaps. Look at this here. How many examples do I have in this one here? Actually 60 different examples. And this is again USD CAD. So one of the reasons why I'm bringing this up here, guys, is because I think a lot of people out there, they really start to believe that, oh, well, I'm a Forex trader, so I have a Forex trading system. Me, I have a trading system that I can apply to any market out there. I can apply it to a 2-minute Forex chart, or I can apply it to a daily stock chart. You know what I mean? So it's always the same thing from there, from when it comes to the markets and stuff like that. So let's actually bring this. Let me bring this down. Let me bring up a chart through here. So remember, guys, what we want to understand is that how do the markets work and how do they operate within these markets? Because once we understand that, and I know probably 99% of people out there, or 90% of people out there, are not looking for the truth about getting in the markets, right? They just want the get rich quick scheme. They're like, show me the quick tip right now so I can make money right now. And then they end up going backwards and so on and so forth, right? So the big thing that you see here when it comes to the markets itself, right, is the market goes through ebbs and flows, right? So the market will ebb and flow. So the first thing that we must understand is when we're looking for trading opportunities, all right, when we're looking for, oh, by the way, I'm just looking at Kane here, by the way. Ooh, Kane. Some of you guys may remember, I think it was yesterday. Was it Kane? Were we looking at Kane yesterday? No, I don't think it was yesterday. Was it yesterday? I don't know. So the whole thing about these markets, right, is that if we understand how markets work, and for you guys that don't really understand what I mean by how markets work, right, is they go through waves. So again, this is all about putting the odds on your side of doing really well in the markets, right? So we go through different waves in the markets, right? We go through a wave up, and then we end up having what? A bit of a pullback, right? And then we can go through another wave up, and then we go through another pullback, and then we have another move up. So that's generally what happens in bull markets. And then also when you flip it upside down, right? When you do the whole flippy, then that's a bear market, right? Bear market, bull market, bear market, bull market. So what a lot of amateur traders, what they do in the markets is a lot of amateur traders, what they'll do is they will, a lot of amateur traders, they wait for the market to make a really good move in one direction. Then they jump on because they don't understand what I've just said here, right? And unfortunately, when most traders, they wait, and they start to jump in here, which could be the last 20% of the move, and then the market pulls back. And sometimes we get a really good pullback out of it, and then a continuation. And so this is where a big mistake that a lot of traders make out there is that when they're making these, when they're trying to get into a trade, they get into a trade after the move has already happened. So the market will go for a move for a while, and then it'll take a breather, right? And then it'll have a pullback. A pullback is that a strong move up, and then a nice pullback, strong move up, and a nice pullback. So what a lot of traders do is a lot of traders will actually do that. But what will happen is that then the market pulls back. It's like, oh, the market burnt me, right? It's because they just don't understand the market psychology. And unfortunately, because most people are like have a herd mentality, right? So most people have a herd mentality when it comes to these markets. The herd mentality simply says, I'm going to wait for everyone else to be doing this, then I'm going to get in. You do that in the stock market, you're going to get run over 99% of the time. Hence the reason 90% of traders actually don't do well in the markets. Even when it comes to a trading opportunity, they wait for the market to go up and up and up. Oh, now it's building steam. But then they don't realize, no, it's not building steam. It's actually running out of steam. And then we're getting ready for a pullback. This is where we should be looking to enter here as it's starting to pick back up from the pullback. And then the market goes through it. Market goes up, and up. And then it has another pullback. oh, market, right? The market's actually now picking up steam again. So it's what you call these phases here, right? So these different phases here, I like to call them resting phases, right? Think about this as a resting phase, right? After a while, just think about you going to the gym, right? You're over here, you're doing the gym thing, right? Bing, bing, bing. So we go to the gym and we're going to the gym and we're using energy. And there comes a period of time where you're like, I'm exhausted. My body's tired. I need a bit of rest, right? And then guess what happens? You need a bit of rest. You got to refuel, have a bit of a sleep, maybe a bit of a massage, right? Stuff like that. And then guess what? Then, okay, I'm now getting ready to get going again. And then you go for another good workout. And then you get tired again. And then now guess what? Now you need to rest again to let the body recover, center yourself. And then guess what? Now we're getting ready to go again. What most people do is they do the exact opposite, right? They're like, oh, I'm gonna wait for this guy. I'm gonna wait for this particular guy to be training for an hour. Then I'm gonna go bet on him. Could you imagine that? Can you imagine a professional boxer training for 2 hours, really hard, intense, and then go into the boxing match? Would you bet on him? You probably not, right? He's exhausted. So understanding that process there, right? This is where trading can be actually quite simple. It doesn't actually have to be that hard. So firstly, that's the reason why my rule in my trading system, firstly, is that do we have do we actually have a trend in place, right? Because if the market's doing this, guess what? There is no trend in place. There is no one in control. There's not an uptrend. There's not a downtrend. There's no one in control. I only want to be trading when someone's in control. What I mean by someone in control is that we have an upward trend or we have a downward trend, right? There's a clear upward trend here and there's a clear downward trend here. Right? So we have a clear movement in these markets here, right? That's what because again, guys, this is all about probability, right? We just want to give ourselves the best probability of having a successful trading career. That's all we want, right? We don't want, in the back of your mind, if you make money really, really quickly on a tip, that's not what I'm all about. Again, that link in the description there with my coaching program, 95% off for today, or it actually ends today. You'll see with my coaching program, I'm all about teaching you a repeatable system that you can use for the rest of your life, right? Not just let me make you a quick tip here, right? It's like, let's actually teach you for the rest of your life. But my first rule is always, I want to be making sure that there's actually a trend in place. Because if we're getting this here, there is no trend in place and it's just guessing, gambling, and so on and so forth. So that's the first thing that I'm always looking for myself. So if I go look at the charts and I go bring up any chart through here, right? Let's bring up, say, Microsoft as an example. And we have a look at Microsoft. What is Microsoft been doing? Right? We can see here that Microsoft has been, you can see through there, right? So look at this here. So Microsoft went low, and then it's actually peak. Then make a high, then it made a high low. Look here. Now guess what? Now see how we're starting the nice upward trend through here. Nice upward trend, and now we're making this point through here. See, as I said before, right, the best time to be trying to get into it is around about here. Right? And the reason why I say there is that you never know where the bottom is going to be, but you wait for the market to come down, and then you wait for it to pick up just a little bit more, and then you jump in on the next move, right? Here, you don't buy it down here. Now, this is for trading opportunities, right? The best thing is wait for it to pick up a little bit, and then try to buy it there. Right? So that's actually one of the best things out there is that we want to see someone clearly in control. We want to see a strong trend. So a strong trend, yes. But then, as I said before, we want to see someone in control. But then what we want to see is we actually want to wait for some form of a pullback, right? Because then we're getting, let's see, like here, pullback, resting phase, getting ready to go again. Pullback, resting phase, getting ready to go again. And so now sometimes you might see a stock. What about Visa? What's Visa look like today? Okay, well, Visa's actually in a nice upward trend. Look at this here. All right, so Visa's higher low through here. another higher low, and look what's happening here, right? We've got a beautiful high lows, right? So if you're trading Visa right now, if you're looking at Visa and you're looking at for an opportunity, the best opportunity is what? It's going to be going with the market, with the trend. I don't know why, but so many traders out there, when they see a strong upward trend, like, I'm going to short it here because it's going to definitely be the top. Why would you do that when you know that probably at least 8 times out of 10, the trend is going to continue, and the 2 times it's actually going to stop and actually cause a top? Why would you have that? Why would you want to be doing something when you know you're going to have probably at least a 70% chance of being wrong? Think about that for a minute, right? Because in a good bull market, you never know when the end's going to be. But if you're in a good bull market and you keep trying to pick the top, guess what? You are going to get knocked out 7, 8 times out of 10. And the 20% of the time, you're going to get it right. Why would you want to approach the market in a way where you are going to be wrong 70, 80% of the time? Wouldn't it make sense to flip it on its head and actually then go with that, right? And so that's what you want to see. That's what you want to do. And then people make life difficult. So when I'm looking at, say, for example, the Nasdaq right now, and I'm looking at the Nasdaq or even the S&P 500, right? And I'm just looking at these here. What's the S&P 500 doing right now? And guys, this is what I want you, guys. This is the thing, right? Trading opportunity. When you trade the markets, we just follow what the market's doing with us, right? We have a low or higher low. We have a slight higher low through here, and we're getting another higher low through here. But what are most people doing right now? They're trading the market in a way where they're guaranteed to be wrong 70, 80% of the time. Why? Because they're taking all this other external event of why the stock market should go down right now, even though the market is starting to really step in a strong upward trend. Yeah, now, yes, we may be at the top right now, but and I remember I said before, if they short the market right now and the market does go down right now and they got it right, guess what? Now they're going to continue to trade that way. And I promise you 70 to 80% of the time, just by trading against the overall market, you are going to get washed away. And that's what a lot of people who are trading the markets right now, they're like, I'm going to short the market right now because I believe it's going to go down. But the market is clearly in a strong upward trend. And if instead of going against the market, instead of trying to fight the market, why not just go with it? That alone is going to put you into the 70, 80% success rate, right? Is trading with the trend, and then also trading after pullback, right? Now, again, trading with the trend, trading after pullback, right? What do we see through here? See a trend, we wait for a pullback, and this is what you want to see, right? You want to see a pullback first, and then you trade it. What's going on here? And this is where guys are, trading is actually quite simple when you start to break it down into some simple bite-sized chunks. Unfortunately, most people are looking to pick the top because they think all this other external fundamental news right now is going to equal this in the markets, which, as you know, that the worse the economy seems, the more we're actually getting very close to a bottom, or if not, we have already bottomed because the stock market's looking further ahead, right? When was the bottom in 2020? COVID. It was when they first announced lockdowns. We had one more week of downward movement, and then the market slingshot to the upside. Hang on, that doesn't make sense. We just had lockdowns. Why is the stock market going up? See, again, this is where it's difficult for most people out there. So trade with the trend. So we got here, and again with the S&P 500, people looking to short this right now. And they make their life difficult out there. I know one particular person right now who's short the Nasdaq. And this exact same person who's short the Nasdaq right now, and again, if we're using what the market is telling us right now, we have a low, we have a higher low, and we have a higher low. The market's in a clear upward trend right now. And yes, you may be right now. But remember I said before that you continue to trade that 10, 20 times, you're going to get run over 70 to 80% of the times, because 70 to 80% of the time, you're not going to pick the top, right? Just like back here in the COVID days, right? Now, yes, hindsight's 2020, But back in the COVID days, look at this here. As this market was trending up, guess what was happening? Higher low, right? Look at these higher lows. But guess what people were doing? As this market was still making these higher lows all through here, guess what people were doing? They're like, oh, double top. I'm going to short the market. The market goes up. Oh, that's it. The market's rolling over. That's it. I'm going to short the market here. The market's going to top out. It's a big head and shoulder formation. It's making high lows. Up. Oh, the market's going to crash. Oh, the market's going to crash. Right? And as you can see, if you just waited, if you just saw a trend and you jumped on the trend, you'd be right 7-8 times out of 10, jumping on a trend. And guess what? Waiting for a pullback. Wait, see nice trend, wait for a pullback, right? But the reason why most people get in trouble right now is because they're doing the exact opposite to what I'm talking about here, right? Well, actually, no. Firstly, most people who trade the markets don't have any plan of attack at all, right? They just, well, I'm going to buy today because this YouTube video said it's pretty good to do. It's up to you guys if you want to get good results, but I'm just sharing with you that you don't want to be doing that. And I know one guy right now is doing the exact same thing, right? He's actually short the Nasdaq because he thinks the stock market's going to go down. He's had this such biased view that he even started shorting Apple right here. Right? He actually shorted Apple right here. Why would you short Apple right there? He actually shorted Apple. He's like, and he even messaged me, John, the market's going to crash. I see a big crash happening, big crash, big crash. And then the market went up. And obviously he lost all his money. Big crash happening. Apple's going to go down. But hang on a minute. We're not actually in a downward trend here, are we? We had a low. We had a lower high. And we had a lower high. And then guess what happened? We made a higher high. Remember, in a downward trend, what do we want to see? We want to see lower highs. If you see a higher high, we are no longer in a downward trend. Don't try to short the market. It's possibly going to be a change in trend. Now we've got a higher low. Now look what's happening. Boom, 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 all the way out. So again, people try to fight the markets. And it's really simple analysis here. But as you can, unfortunately, most people look at the chart, they go, right, now, what's the indicators telling me today? Stochastics are saying this. I'm focusing on my RSI. Okay, I've got my 200 moving average here. Do you see what's wrong with that there, right? It's like we're focusing on all the derivative instead of actually focusing on the main thing. And it's actually not that complicated. You got a 50-50 chance initially. Then start to overlay that with some simple trend analysis and then wait for some form of a pullback. You start to increase it 70 to 80% success. Where most people, they like this particular guy I'm talking about right now, he's short the market and he's short right now. Now he may be right and the market may go down, but there's a 70+% chance that this thing is going to continue up. Why? Because it's still in an upward trend as we speak right now. And if you want a long-term successful trading career in the markets, why not approach the market, approach your trading in a way where you can be right 70+% of the time, which is what? Wait for some sort of strong trend and then wait for some form of a pullback. Then what I like to do is I then like to overlay a moving average, right? So I like to wait for a pullback towards a moving average, and then I like to trade it from there, right? So when I say pullback, I always like to see a pullback towards the moving average first. So I use a 52 here. So I like to use a 52 moving average, and then I wait for the pullback to happen towards that moving average, and then I like to buy it. Yeah. So that's basically what I like to do, right? Is a pullback towards the moving average, and then I like to buy it. But I wait for me personally when I talk about a pullback here, guys. My number one pattern when it comes to a pullback is, let's actually bring up this one here. Right? Yeah, this one here, right? My number one type of pullback is this one right here, right? Look at this here. This is an exact example of what I look for. I like to see where the market comes down and then it has a nice pullback to the moving average, and then I wait for a breakout bar, and then I look for a move down. again, guys, that link in the description there, guys, you'll be able to see the full detail of what I look for in a system. But that's basically what I look for. And again, so what do we have here? We have a good strong trend, don't we? Look at this here, right? Low, and then guess what? We have a lower high, and then we have a good. I'm looking for a lower high, good strong trending moving average, and then I'm waiting for what? I'm waiting for the breakout to start the next move, and then I'm just jumping on that next move. Right? Same with, this was a trade that I took recently as well too. Right? Look at this here. What do we have here? High. We have a lower high. We have what? We have a pullback, or at least a sideways movement. And then when the market started to break, it had a nice move down. So trade with lower highs, yes. Then wait for some form of a pullback, yes. And then wait for the break to potentially start the next move, and then the move down. Just that alone, guys. Now, then obviously it comes to like precise entries and then managing your exits and so on and so forth. But if you don't have your foundations right, if you don't even have your foundations right of what you're actually looking for in a good setup, you're just blindly getting into anything. See, unfortunately, most people are looking to get into a trade and they're like, oh my goodness, and they see it down here, right? Oh my goodness, I'm going to start the short. I'm going to short Siri right now. I'm going to short it. I'm going to short it. I'm going to short it. Because you're doing yourself a dissatisfaction by doing that here, guys. Why? Because after a period of movement, guess what ends up happening? Oh my goodness, the market burnt me. As soon as I got in, the market did nothing. Of course it was going to do nothing. Guess why? Because it needed a rest. We go through a working phase, and then we go through a resting phase from there. So if you guys have any questions for me, guys, just let me know. Any stocks you want me to look at or anything like that, just let me know. But that's what that's the sort of stuff that I want to talk about with you today, guys, because I want to help you, right? And again, if you're completely going against what the market is telling you, completely going against it, and you're fighting the market like you're trying to short the stock market right now, and for a trading opportunity, I mean you're trying to short it right now and hoping for a move down, trading opportunity, then again, you're going against with what the market is telling you, right? Now, as I said before, for me personally, I wait for a trend, I wait for a pullback, and then I wait for the market to move first. Wait for a trend, wait for a pullback, and then when I wait for the market to start to move up, and then I jump in on it, right? Because you never know when that up move is going to be. So for me personally, as I said before, guys, I wait for, let's actually do this here. There we go. All right. So for me personally, I like to see this. My sort of ideal setup is this, guys, is that, let's actually bring this up to here. So if we had some sort of a moving average, say that's the moving average through there, I like to see this market actually having a move up and then waiting for some form of a pullback. And then as it starts to break up again, this is the time I'm actually looking to enter. Because I have a trend, yes. I have a low and I have a higher low. I have what? I have a strong pullback, and then now I'm looking for the market to pick up just a little bit after that pullback, especially when it comes near the moving average. And then I'm looking for the market to start to pick up again, because then there's a good probability of what? Now we're getting ready to start what? The next upward phase. So that's what I'm looking at from there. And these are the sort of things, guys, that will really that will really sort of help you when it comes to your overall trading from there as well too. So again, guys, just let me know. Let me know if you have any questions or anything you want me to look at, and then I'll be able to answer them and help you out with anything there. Let me actually. We don't need to make it so hard, guys, okay? We don't need to make it so hard. It's actually quite simple. But unfortunately, the industry that we're in right now, or the industry that I'm in right now, unfortunately, what happens is we've been led down the path, right, that trading is really complicated and trading really is difficult. It's like you have a 50-50 chance. upload some trend analysis, upload a pullback, and then a break, and then and as the pullback is breaking away, that thing alone, I promise you're going to have a 70% success rate. That means you're still going to have losses in there, yeah, but majority of the time you're going to do well. And that's where, guys, when I'm talking about short-term technical analysis, like with the stock market, and people shorting it right now, it's like, it's not my view. All I do is I guess go with the market, because I know most of the time, if I'm going with the trend, 70, 80% of the time it's going to continue. And then 20% of the time it's not going to continue, right? We're going to stop. Hello, John. PayPal. I think that's PYPL, isn't it? Yep. What do I think of PayPal? Oh, wow. PayPal had a... Look at that. Look at that. Holy dolly. Holy dolly. Okay, here's a really good example, guys. When I talk about trend analysis, right? It's a really good example of when I talk about trend analysis. Look at this here. And again, this is where we just go with the markets, right? Just go with the market. Don't fight it. Don't fight it. I'll get to what I think about PayPal in just a minute, but I want to use this as an example here. Come on now. Come on, TC 2000. Load up. Again, guys, it doesn't have to be that complicated. People, it's just like, go with the market. Don't fight it. Go with it. Okay? So, let's have a look through here. Let's actually bring up my good old Dubulaki, my good old Snagit tool for you guys. Here we go. Mr. Snagit over here. Mr. Snagit. All right, there we go. So, look at this here, guys, right? So, we have a low period through there. Bam. Higher low, higher low. We have a higher low, but we start to have these equal lows, so it didn't actually break down. Then we made a slight higher low and a slight higher low, and we had a slight higher low here, okay? So, as you can see, guys, we never actually broke the lows, so we actually still were making higher lows through here. So the buyers were still holding the prices up through here. And I guarantee you there would have been a lot of people that said, oh, double top, that's it, double top. The DT, the double top, the top's in, the market's going to drop down. Oh, John, you're not seeing the head and shoulder formation? It's going to go down, it's going to go down. Right? And then away we go. So when we're looking at this here, look at this here. The best opportunities through this whole time were what? Up. But then guess what happened? Look what happened. We made this higher low here. Well, actually, let's delete that. Right? We made this higher low here. But then look what happened. Came up, and then we started to create what? Now we actually started to create a lower high. And as soon as we actually broke that low, notice how this low here, right here, remember this was the higher low, right? Higher lows, higher lows, higher lows, higher lows, higher low. This was the higher low, right? Buyers in control. Suddenly the market stopped on a dime, and it changed, and it said, no, we're going to create a lower high. And as soon as we actually broke this high, this low here, which was the first time that the buyers actually stopped raising their prices, which simply means this. Higher low, buyers in control. Higher low, higher low. As long as we're making higher lows, buyers in control. But as soon as we actually break one low, guess what? We're not in an upward trend anymore. Then look what happened. As soon as we did that, you'll be saying, no. The trend is starting to change now. The trend is starting to change. And then look what happened. Then we started to create these lower highs, and your best opportunities were what then? Now with the trend going down. And then if you saw it from this point here, now you saw, now we actually made a higher high. So we could be getting a higher low here soon, but we're no longer in a downward trend because this is the first time what? We've actually broken that high point through there. So as you can see, the best opportunities through here were long. Oh, no, John. Well, of course, right? So that's the reason why whenever the market is doing higher lows, you only look for long opportunities. And whenever the market starts to create these lower highs, you only look for shorting opportunities. If you just do that, as you can see before, as I said before, guys, right? Look at this here. Upward trend, buy after pullback. Upward trend, buy after pullback. Buy after pullback, buy after pullback, buy after pullback. Oh, look, now we're actually going down. So now we're gonna wait for a pullback. We're gonna go short. Wait for a pullback. Gonna go short. Right. So again, guys, trading, you do not trade the markets by using a GDP report. No, that's not the way trading works. Okay, trading is a technical analysis thing. We see patterns, we get in, we have a probability of it working out, and then we trade that. Right? If you're looking to invest in maybe the cycles of maybe what the GDP report's doing now and what's likely to do moving forward, then you can invest in that. Right? But that's not trading. Trading is all about looking for pattern recognition and then jumping on good trends from there. So, a lot of people right now are saying the GDP report, this and that, and this and that, and this and that, all these other fundamental external reasons why the stock market should drop right now. It's like, but the stock market, but all those fundamentals, all those fundamental reasons why the stock market should drop have been there all this time, but the market's been going up. Let's actually look at the reality for what it really is. So looking at this here right now, actually looking at PayPal, we just broke below here, didn't we? Ooh, look at that. So PayPal looks like it's about to get, PayPal looks like we could actually see a move down towards that $40 level. Maybe. This also could be a false breakout too. So the reason why I say that is because we've already had a very big move down here on that weekly chart. And now we can see this move here. So if PayPal does hold, if PayPal holds here and gets back above $70, guess what? This here is, if PayPal holds here and we start to see PayPal get back above that $70, even start to see an $80 print to be more conservative, guess what? That now is probably going to be the low in the markets because it's going to be a false breakout. It's going to be more like an end of trend indicator. And then what we're probably going to see is see PayPal start to have a nice move back up from there. So that's the first thing. But if we don't see that, then we're probably likely to head back down towards that $40 level as it's been doing right now. We're not getting any strong bars out of this level here. So that's actually a big thing I'm noticing right now. All right, we're definitely getting a lot of sort of strong bars from there. So that'll definitely be the key for me there, guys. If we do hold here and then turn back around, this is more like an end of trend type of indicator. And we had this sort of compressing down here on this sort of level through there. So once again, if we do hold and we start to really like get back above, again, start to see an 80 print above that level there, that tells me this is now probably going to be a low in the markets. It's more like an end of trend indicator, a false breakout. And when that happens, then we may see a slingshot to the upside. But we need to see this first. If we don't, and it does hold here, then we're probably going to see a move back down towards that $45 level. Do you set stop losses, Charles? Yes, I do. Yes. So for me, Charles, again, that link in the description there, Charles. I'm running a 95% off to my coaching program. On that page there, I actually have a full complete training video walking you through my trading system. And so what I've taught here today, Charles, is the basis of what I use, but I also look for the exact type of pullback, and I also look for the exact type of entry bar as well too. And so mine is always the same. So I always set the exact same stop losses. Do you backtest your strategies? Charles, I only trade one strategy, really. And I've been trading that now for well over 10 years. I learned it from a mentor who's been trading it for 30 years. So I don't create new strategies. No, I just keep it really simple. Why? Because my strategy is based on how markets work, right? I wait for a good trend. I wait for a pullback. I wait for the market to start to pick back up, to potentially start that next move in an upward trend. And then I'm looking to jump in on it. Pretty simple. Yes, always set stop losses. Now, Art, I have to put a question mark on there. If you are short in the market or buying the market, yes, you're going to set a stop loss, right? Of course. If you're doing forex trading or foreign exchange trading, or futures trading, yes, you set a stop loss in place. Always set a stop loss in place. But the way that I use it when I'm buying options is I don't set stop losses in options. I don't set stop losses in options. What I do is that when I'm buying the option, my stop loss is the maximum risk that I'm actually putting into that option because I only buy options, right? And so for me personally, when I'm actually using options, I accept the fact that 100% of what I'm actually putting in here is my stop loss. My stop loss is 100% of what I'm putting in there. And if you're too scared to actually do that, then you're trading way too much of your account. So for me personally, if I normally put on 20% of my account on one trade, and that's going to equal a stop loss, then again, and if I can't do that with an option, then guess what? I need to actually bring it down. For me personally. Now again, guys, options is not the thing that makes me money, right? Stop losses are not the thing that makes me money. Remember, you can have if you have a horrible trading strategy and you have a good stop loss, you're still going to get stopped out, right? So what is your foundation? Your foundation is what? Having a good setup. For me personally, it's having a good setup and knowing exactly what the setup looks for. And I also look for a precise type of entry bar for me personally to get in on. I'm always looking for a precise type of entry bar to get in on. And so therefore I know my stop loss is always it's always the exact same thing every single time. There's no differences from there. What time frames do you follow the trend? What time frames do I follow the trend? I always look at, so if I'm looking at the daily charts, I'm looking at the daily charts for the trend, but then I'm also looking at weekly charts for the trend, depending on what you're actually looking at there. If I'm looking at, say, a 5-minute chart for a Forex chart or a futures chart, well, then I'm going to go, maybe I'm going to look at that as the trend, but I'm also going to start to look at, say, the 15-minute chart for the bigger trend. I'm always using multiple time frames. So this one here for PayPal, then I'm also going to look at PayPal as in like the higher time frame trend, because the higher time frame, which is the daily for the trade, and then the weekly chart, I'm using it for the trend because it really filters out a lot of the noise and gives me the true big trend. So if I'm trading, say, a 5-minute chart, I'm looking at a 15-minute chart for the true big trend there, and the true overall trend. If I'm trading a daily chart, I'm looking at the weekly chart and so on and so forth from there. If I use a 15-minute chart for an entry, then I'm using that from there. So it's a combination of those things. When you start to master that, because all I'm really looking for is that I'm looking for a good trend, good pullback, and a good entry bar to get in on say the daily charts. But then I want to make sure that I'm trading with a good, strong weekly trend as well too with that. Just give me a sec, guys. Give me a sec. All right, traders, I'm back now. Alrighty, let's continue on with these questions here. So I hope that makes sense, guys. And again, Charles, the main thing is that, again, I don't have multiple strategies. I have one strategy that I trade. One only. Which gives me a high win-loss ratio. Last week I had 2 successful trades. So, hey, Thomas is in the room. Do you set your entry and exit ranges? Charles, as I said before, it's not ranges, right? It's not ranges. So no, for me personally, I'm always setting my stop loss, and I'm always looking to. When I actually do use a stop loss in the markets, John the Terminator. I'm back. So yes, when I set a stop loss, the way that I like to trade, Charles, is that I have my maximum stop in place, but I'm looking to bring that stop up as quickly as possible to protect and minimize my loss if there's going to be. But then I also let the trade run as well. So then I don't actually have exits for profits most of the time. Most of the time I have my stop loss in place and I'm trying to maximize those profits there. So as an example, here was a trade here that I took, or that me and my private clients took as well too. Again, guys, that link in the description there, guys. I'm celebrating my son's birthday with the 95% off to my coaching program that ends today. That link in the description there. But here's an example of a trade that me and my clients took, right? Here, sideways, and we end up getting on the breakaway bar. So this is the exact setup that we look for, right? And so what on this example here, my stop loss for me personally is I always set my stop loss at the high of the bar. So my stop loss is always at the high of the bar from there, right? That's where my stop loss is. But then guess what I'm doing? As the market starts to move in my direction, I'm bringing it down to 15%, 50%. So I halve my stop loss. And then I'm bringing it down to just above break even, so I can't actually make a loss. And then I bring it down even more. And then I'm bringing it down even more. As the market continues down, then I'm bringing it down even more. Then I'm bringing it down even more. Right? And then I'm going to keep bringing it down even more, right? So what I'm doing here is, yes, I have my stop loss in place, but this is the art of when you have your stop loss in place, and then as soon as I can for the first few days, I'm looking to bring my stop loss down to 50% or so. Sometimes it's like that. Sometimes it's like I'm looking to lock in at least a small profit there. So LSXMA was another trade we actually took. LSXMA, right? So here was another trade we took. So here was the guess what do we look for, guys? Right? Trend. What do we got here? Low and a lower high. We wait for what? Down. Wait for pullback, and then I'm waiting for a breakaway bar. So that's what we did there. For me personally, my stop was at the high of the bar. Again, guys, it's at the high of the bar because I'm waiting for what? I'm waiting for a good trend. I'm waiting for a type of pullback. And then I'm waiting for a good strong breakout bar. All right. So that's where my stop loss was. And then guess what? As soon as the next bar came down, I actually brought my stop loss down here to just slightly above break even, so I couldn't make a loss. And then I let the market go for another few more days. And then I actually brought my stop loss down there. And I let it keep going. And then I keep bringing it down to there. And you keep bringing it down to there. And you keep bringing it down to there. And so on and so forth, right? You let it go for a few more days. And so on and so forth. This is the art. This is the art of successful trading. Firstly, good foundations, right? Which is what? Trade with the trend, trade after pullback, and then the nice good breakaway bar. That's all it really is. Right? Trade after a trend, trade after a pullback, trade for a breakaway bar. And then what I'm doing is I set my maximum stop loss, but I'm most of the time I'm letting the market move because I'm trying to capture as much as I can on that move. So my risk on this trade, my maximum risk was that there, but then the how this worked out is 300%, 400%, 500% return on my actual risk there itself. So that's what I'm looking to do myself there. And this is the art of what? This is the art of minimizing your losses. So bringing your stop down as quick as possible after a few days, but then also letting the trade run so you can have small losses and then good profits as well. So most of my losses, because most of my trades, most of my losses is that I'll get in and then maybe for 1 or 2, 3 days, it doesn't do much. And then I bring my trade down to 50% and then I might get stopped out at 50%. So if I get stopped out at 50% and say I have a $10,000 risk there, okay, so I just lost $5,000, right? But then the next trade does what? I have that's a $10,000 risk there. I bring it down to 50%. The market comes back up, takes me out. And this one here, I get stopped out for a $5,000 loss. Okay, cool. What happens in the next trade is a 300% return, like this one here, a 300% return on my risk. If my risk is $10,000, one trade I get stopped out at say $5,000, the next trade I made $30,000. And that's how you win at the game of trading, right? Is that that's how you trade it. Amazon. Let's actually look at Padawan. Let's have a look at Padawan. Padawan says Amazon looks good per your approach. Does it? Okay. Per my approach? No. Because I'm after a good trend, and then I'm after some form of a good pullback, right? So yeah, we have a low here, and we have a higher low here, all right? And we've got another high low here. But what my approach is yeah, we have this here, but I'm waiting for a really good sort of sideways movement, nice good pullback for a while, right? And then I'm looking for a continuation. So no, this is not a pullback, right? This is actually moving in the direction of the trend. This is a pullback. Look at that there, pulling back, and then away we go again. This is not my approach. This is not. And it's not really my approach. It's just you're just trading with the trend, and then you're waiting for a good pullback, and then away you go. A pullback, no, would be a good opportunity for next move higher, maybe like what Google did recently. Exactly, Padawan. Exactly what Google did, right? This is exactly what we're talking. There you go. See? Now you're talking. Perfect. Low, and then we had what? Another strong high low here, and then we also had another high low here. Look at this here. And then after what? A really good pullback. And now look what's happening. Oh, Google's going to go down. I'm going to short Google. Don't fight the markets. Don't fight the markets. Again, guys, if you're trading the markets, do not be using fundamentals. But John, the GDP report came out bad. So what? So what? Trade with a good foundation, guys, where most of the time you can do well. And just stick with that, guys, right? Don't make life complicated for yourself. Just like exactly what you said, Padawan. Exactly. Perfect. And then away you go, right? Trade with the trend, trade after a really good pullback. So Padawan, big thumbs up for you. Could you take a look at TWLO? Sure, TWLO. Twillo. Downward trend. If you're looking for a trading opportunity, lower high, lower high, lower high, lower high. I wonder why Twillo's going down. It's making lower highs. It was, look at this here, low, and then it made a higher low, and then it made a higher low, and then guess what? And then it made a lower low. As soon as this happened here, again, guys, this is for trading opportunities, guys, okay? This is for people who trade the market, who are looking to get in and get out for a few days or sometimes for a few weeks, not for people who buy and hold for many years, right? If you're looking for my approach for buy and hold for many years is based on massive cycle analysis, right? That's why like gold and silver and, the gold mining stock, stuff like that, what's likely to happen, over the next 5-10 years of the massive cycles that are taking place, that's buy hold for many, many, many years, not buy hold for 2 days and then get out. No, right? That's investing. Put that aside, right? This is more like trading approach. This is like I'm looking for opportunities to make money now, right? So the same thing here, right? The market's always talking to us, isn't it? Look at this here. Low, higher low, higher low. Look at this here. As soon as it broke that low, then it made a lower high. Now we're in a downward trend. Actually, it made a lower high there, didn't it? So that's where the market was really starting to tell you it's going down. So we're in a big downward trend from here. We're coming towards a good level of support level there now. So that's a very, 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 possibly even lower than that. But there's actually a very strong level of support through there. So I wouldn't be too surprised to see it actually have a bit of a bounce. But Twillo, down, 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 down. What would you recommend? Swing trading, scalping, or day trading? Bram, I would recommend the way that I've been teaching, right? You trade with the trend. You trade after a really good pullback. And then as it starts to pick back up, you get in. Some of them are going to be losses, so you need to accept that. you have a good stop loss in place, and then you're looking to bring your stop loss up as quickly as possible, right? While then letting that trade run on as well too. That way, if you can have, 50% losses and 300-400% profits, you could be 50-50 right with that type of approach and do really well. And that's, guys, we just want to set the game up to win, right? We want to set the game up to win. Let's actually, that's all we want to do, right? We want to say, if I take 10 trades, at the end of that 10 trades, do I have a high probability of actually making money? Yes or no? That's what we want to do, right? Not, I'm going to short the market right now because the inflation or the Fed funds rate or this or that or the banking crisis or this or that or that. It's like, no, right? You take 10 trades off the exact same approach, and out of that 10 trades, you might have 7 of them make money and 3 of them don't. And out of that 7, the average profit is 150%. And out of the 3, your average loss is 50%. You make money. Rinse, recycle, repeat. That's how you do it long term, guys. And then you do the same thing. Do. You keep going. Again, guys, that link in the description there, guys. If you want to know my actual full trading strategy, then get access to my coaching program there, guys. 95% off. It actually ends today. And I'll, again, if you like this sort of stuff I'm teaching here, then I will coach you. I'll show you my system. I'll show you the full details of what I look for, and I'll coach you to help you as well too. Again, 95% off for celebrating my son's birthday ends today. Link in the description there. QQQ. I went through QQ. Let's actually go through QQQ. I walked through this before, but looking for next week. We have actually started to move slightly to the upside. So, let's have a look at this here. QQQ may continue up from next week. Actually, we're probably going to, right? Yeah. Because that's that level through there, isn't it? Maybe a bit lower than that. Actually, you know what? QQQ actually may get... Where's that level? It's probably through there somewhere. Yeah. Okay, so QQQ we may actually get a little bit more movement to the upside, because we're actually starting to slowly crawl to the upside here. So I wouldn't be too surprised if actually QQQ started to see... Yeah, if we actually had a bit of a move to the upside, then maybe we're going to get a maybe we could get a little pullback here. But I definitely wouldn't be shorting it now, because this actually just could be starting that next move up. What are your thoughts on QQQ for next week, John? Oh, there you go. I just talked that list, yeah. So that's my thoughts on it. Is that the trend is still up in place, but we're just slowly going up. We're not really going up very strongly. So look at this here, guys. Right? What do? Look at this here. Low, higher low. What did I say before? Wait for a pullback. Wait for a pullback. Jump in after the pullback, and then let it go for a bit. I think there's something to this, John. It's exactly what I've been talking about this whole time. If you guys don't know, then you can... Yeah, the good thing is you can watch the replay as well too. Okay. I have seen a few people use volume. Is it good to check while trading? You can, King Dong, right? You can use volume if you want to, but the most important thing is not... The volume is not the most important thing. It's what that market is, what that chart is telling you at the time. Do we have a good strong trend or do we not? And if we do, we wait for a pullback and we're looking to jump in on that next move. Most of the time you're going to make a profit. Have a good letting your profits run strategy, cut your losses short strategy with that. And then you're going to do well. And just accept the fact that you're going to have some losses in there as well too. And you accept the fact that any given trade can actually be a loss. And then guess what? The next type of trade you do, well, guess what? It's the exact same approach. And guess what? And the next trade you do, it's the exact same approach. And guess what? And the next trade you do, it's the exact same approach. For me, guys, I'm always looking to trade the exact same thing. It's always the same thing day in, day out. Let's go to here. Can you explain how his chart / candle works? Tuan, me, I'm not looking at candles. I'm not even looking at bars. The most important thing for me is looking at the overall flow of a market. And all that simply means is where's the highs, where's the lows. We have a high here, and we have a higher low here, and we have a higher low here. That's the most important part for me that I'm looking at here. I'm not focusing on the candlesticks. Right? I'm focusing on the trend first, and then obviously, but then yes, then with my trading approach, then yes, I'm also looking for a good entry signal off that as well. So again, guys, what I'm teaching right here is the basis and the foundations of how I trade, right? Again, but I have exact criteria of exactly the type of trend I'm looking for. I'm looking for the exact type of pullback, and I'm looking for the exact entry bar off that pullback, right? So I have a complete, what I'm telling you right now with trade after trend, I'm giving you a loose sort of guidance here, right? But again, for me personally, I have the exact rules of what I'm looking for. So it gives me a massive probability of actually making money in the markets. So that way, guess what? The rest of this year I can make money, and next year I can make money, and the year after that I can make money, and the year after that I can make money. Some people right now are looking to short a bull market, and next year they're gonna be bankrupt. Aha. All right. John, a personal question. I know you always follow foundations, i.e. wait for strong breakout, etc. Have you ever made a trade or a pullback trigger before confirmation? Because I have this gut feeling. Whenever I have that gut feeling, Thomas, it's always wrong. Now, 5% of the time when I'm trading, I do trade on the gut feeling. But guess what? That 5% of the time, or should I say, that 5% of the time, I'm taking maybe 10% of my profits that I made from my system, and then I'm trading the markets from that there. Not 95% of the time I'm trading, guess what? It's always the exact same thing. No. The thing is, Thomas, is that if I stick to my plan, I'm going to make money for the rest of my life. Not every trade, right? I do have my losses. I had a loss last week. But for me personally, like over 90% of the time, because I wait for a good trend, I wait for the type of a pullback, and I wait for a good breakaway bar, and I know how to minimize my losses, but also maximize my returns in the trades. With that in mind, I know that if I just stick to the plan and not complicate it, I know I'm going to make money. So that's all it is, guys. But so many people are like, I'm going to trade because of the GDP report. I'm going to trade this because of the inflation, or the stochastics is oversold and blah, 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 blah. It's like, it's not that complicated, guys, right? Unfortunately, we believe that we need the stochastics on there to, again, guys, I used to trade like that, right? I understand. I used to trade like this. This is how I used to trade. And I'm like, I'm focusing on everything else but the market. And it was hard, right? And I found it really hard because I was always confused. Stochastic says this, RSI says this, moving average says this, the Bollinger Band say this, the MACD says this. It's like I was so confused all the time. Then when I simplify the process, it's like, I see now. CRSR. Let's have a look at that there. CRSR. And that's what I said before, guys. It's like, it's not about me being smart or me trying to be clever. I'm going to short the market right now because I think the market's got... Again, you're thinking. I'm going to get into a trade. Actually, I am in a trade right now. And I've actually done exactly what I've talked about here, where I did have my maximum loss, and now I've actually brought it down to lock in a small profit, and I'm still going to let that trade run. So I'm actually in a trade right now, where I'm actually doing that, where I had my maximum loss, I had my maximum stop loss, but then for the last 2 or 3 days, it's actually been slowly moving my direction. So I've moved my stop down now to lock in a smaller profit at least, and then I'm going to see if this thing's going to run on for another few more weeks. If it does, guess what? I'm going to lock in more profits. It's the same thing. And then guess what? When I look at the markets tomorrow, guess what's going to happen? I'm looking for my setup. It's always the same thing, day in, day out. Let's have a look at this here. CSSR is a good example. Volatile construction with a breakout of confirmation. Yeah, but yes, you're looking at that, yes. But the big issue I'm seeing here right now is that there's a lot of resistance around this area through here. A lot of resistance, especially when I'm going to that weekly chart. So yes, you are right, exactly what you're saying there. And we are getting a good pullback and a breakaway bar from here. So you are right on that level there. This is probably going to be some sort of a false breakout though. But again, if you're just sticking to a really simple blanket strategy where you wait for a good trend, you wait for a pullback and you buy it. You wait for the pullback and you buy it. You wait for the pullback and buy it. This one here is probably going to be a stop loss or loss in this trade here. But also remember too, guys, for me personally, like if I was in this position here right now, right, and we saw this bar here, right? Firstly, this is not a trade that I take because it doesn't meet my exact trading rules. Again, guys, what I'm giving you right now is a bit of a foundations, but I need my exact trading rules for me to be able to trade something, okay? I did not trade this. I also have a rule, guys, that if I'm in the trade for 2 or 3 days and it does this on me, if this does this on me for 2 or 3 days, guess what? I am out. I get out really, really fast. So yes, I wouldn't be too surprised to see this thing being actually a stop loss in the place. Again, because I did see this trade here. But there's a lot of areas of resistance. So there, yeah, so. But again, guys, once again, like if you just stuck to this approach here and that's all you did and not really think about what I just said there, then guess what? Majority of the time you're going to make money. And times like this, which may be the 20 or 30% that comes back down and you can get a stop loss. Right now, if I was in this trade, which I'm not, my stop loss would be definitely at the low of this bar. So I'd be looking to cut my loss probably, if that was my entry there and that was my exit there, I'm looking to bring my stop loss down to this. I'll bring my stop loss here. So now I'm looking at maybe 50% loss here and not a full loss. My loss is generally at the low of the bar here. And as you can see, that's where my entry was there. Right? We got this bar today. Okay, cool. I'm not too quite sure. I'm either going to get out or I'm going to halve my loss. That way, if tomorrow does open up and we come back down, I get stopped out. I get stopped out for 50%. Okay, cool. But then when there's another good trade, guess what? Then when there's another good trade, I know the next good trade is going to give me, 100% or 200% return on my normal risk on a trade. And that's where, like, when I'm risking, guys, I always risk the same amount of money every single time. So if I risk, for me, guys, for my risk, if I'm risking, say, $10,000 every trade, and I make a $5,000 loss here, I go risk another $10,000 on the next trade. But if that's now a 200% return, I lost $5,000 here. But then the next trade then made me 20 grand. Within 2 trades, I'm 50-50 right, but I'm up $15,000. I risk a lot more than $10,000, but I'm trying to I keep the numbers simple for you guys. So just give me a sec, guys. Give me a sec. Alrighty, guys. Let's actually continue here. What's up, y'all? So David, actually really good pick up there, David. I hope, again, guys, when you click on that link in the description there, guys, one, I'm actually doing a 95% off sale to my coaching program that ends today. But also, when you do click on that link in the description, there's actually a video over there that goes for an hour that you can actually watch that. You can actually watch the full training. you can actually watch the full training, and I'll actually walk you through a bit more of a step-by-step approach of exactly what I look for in my system. But today is more just about the foundations of helping you guys there. What's up, y'all? Want to make some money? Okay. Trade with the trend, trade after a pullback, and then trade with the breakaway bar. How about TMC stock? Let's have a look at TMC. Let's have a look at TMC. Oh. Okay, so daily chart. So TMC right now is actually been moving in a trend like it's actually been moving down. So there's actually high, possibly a lower high, but it's actually been moving down. So it's not actually in a pullback phase. This here is a pullback here. See here we have a downward trend. So this here is the pullback phase within the trend there. Yeah, so that's the pullback phase there within the trend. So that's what you want to see. You want to see the pullback there. How about FCX? Copper mining had a big uptrend until February and now has pulled back for the last couple of months. If it can start making higher lows, then perhaps it could be getting set up for another big move. Padawan. Let's have a look at this here. FCX. Okay, so our job is to see what the market is doing right now as it speaks, right? Not what we think it's going to do. This was a higher low. Then it came down and made this lower low. Now it made this lower high. So right now, as I speak, this is actually in a downward trend, more of a downward trend than an upward trend. It's not a strong downward trend, but this is more in a downward trend. So no. There's nothing here at all as I speak right now. We could talk about ifs and buts and so on and so forth, but there's nothing here that gives me. We're more in a downward trend. And in fact, by looking at this level here, if we break this level here, then we could actually end up back down towards this $25 level. That's all. So just remember, guys, you don't want to just trade off higher lows, right? So, higher lows. Remember, guys, for me personally, I'm not telling you just to trade off high lows. Now, you're going to be better than most people out there because they trade against the market. But I have a full, complete sort of approach, right? Yes, I'm waiting for a good trend, but I'm waiting for a type of a pullback, not just any pullback. I'm waiting for a certain type of pullback. I'm waiting for a certain type of entry buy, et cetera, et cetera, et cetera. What features are you looking for in those breakout bars, those entry bars? Ryan, click on that link in the description there, man, and then you'll be able to see that there. For me personally, I'm looking for. Actually, I'll just share with you the features I'm looking for. Let me just show you a real trade. LSXMA, right? I'm looking for something like this. My features I'm looking for is like this. So my entry bar is I'm looking for a really good strong bar. I'm looking for a pullback, which we have here, right? And then I'm looking for a very good, strong, dominant breakout bar. Because that big, strong, dominant breakout bar, very, very, very strong, gives me the high probability now that we're likely to do what? That. So that's the features I'm looking for. Open up, and strong, dominant breakout bar, opens high, closes low, stuff like that. But again, it must be with a trend and after a really good pullback like it is here, right? This is a good pullback here. Not just 1 or 2 days and then down again. No. As you can see here, this whole pullback here lasted over a month and then we actually had the big move. No problem. Uranium bull. If picking trades for multiple large point moves, candlesticks, not even needed really. John, I got some 320 puts on the QQQ. Ah. So that's why you were asking me for the QQQ. You wanted to see if I was going to say the market's going to go down to next week. Ah, I see. Mr. Padawan. Trading against the markets. 320 puts QQQ, end of the day on Friday. They expire in 2 weeks. You think I should exit them on Monday or a little pullback possible? I can't tell you what to do. You got in going against everything I've just talked about today. So you can do what you want to do. I'm not going to tell you what to do. It's totally up to you. You got in based, again, you did exactly what this other guy did as well too. You shorting a market that's been going up. We're actually in an upward trend. You may be right and wait for a little pullback. It may get a little pullback. This may just be continuing this overall move up as well. So I can't tell you that. I cannot tell you that. Because again, I wouldn't have been in the trade in the first place. I'd be actually buying the market because it's going up. It's like, why make life complicated for ourselves? The market's there stepping up. Let's go with it. Oh, it's much easier to make money that way. URA has a breakout on the weekly. Oh, let's look at URA. Again, guys, does it? Not yet. Not yet. Not yet. But if we do, oh, you said a breakout. UA has a breakout on the weekly. Not really. We're actually remember we're also in a downward trend here as well too. So I wouldn't be too surprised to see URA do something like that and then a continuation on the downside. Look at that there, squeezing up. In fact, looking at this big picture chart here now. Let's go to the weekly chart once again. Yeah, so that'll be that level through there. So looking at this big picture chart, if for some reason I did get a breakdown bar that looks something like that, then that'll actually be something I'd actually have a look at. I have to check. Now, guys, when you actually join my coaching program, I get 95% off in that link in the description there for celebrating my son's birthday. Again, that ends today. In my coaching program, I actually have a step-by-step checklist that I follow every single time, right? So I can't say I'll definitely enter this because I need to wait for the entry bar, and then I need to make sure it confirms every single one of my rules. The type of trend, the type of pullback. I also look at the moving average. I also look at the type of bar that actually happens as well too, the entry bar, so on and so forth. So again, guys, I'm trading what I'm telling you right now, but I'm after those trades that can give me like a 90% success rate, over 90% success rate. So that's why. What is your risk management? How much total capital do you risk for each trade? Do you follow the standard 1% rule of thumb? David, let's actually say this here. Me personally, no, I don't. Because I know over 90% of the time I'm going to make a profit. But that's for me though, right? That's for me. That's what I do. Now, that answer comes off the back of how confident are you in your strategy that works? How confident are you in the way that you trade? Because if you knew most of the time you're going to get into a trade, it's going to make a profit, and you also knew the type of trades to get into that not only is it going to make likely to make a profit, it's going to likely to make a big profit. Well, you wouldn't be risking 1% of your account. Now, initially, yes. Initially, when you're first starting out, like with my coaching program, David, I tell people to start out with 1% risk. Yes, because you're learning, right? You're learning the type of setup. You're learning the exact setups, the exact rules, the exact type of trades. So you're probably going to make a mistake for the first few months. That's nature. But as you start to get really, really, really good, then no, for me personally, no. I don't do that myself. Especially in some of those really good trades that come around. But when I first started trading, when I first started getting this, yes, I'd started with a 1%, and then I went to 2%, 3%, 5%, and so on and so forth from there. But again, I don't trade a lot. I only trade the best of the best trades that I know over 90% of the time I'm going to make a profit out of it. So that's all. But I'm not actively trading every single day, guys, right? Every single day I'm not like getting in and getting out and getting in again. I don't trade a lot. I'm only waiting for the best of the best setups for me personally. The market is about to crash and you are saying breakout. Mike. Really? So there we go, guys. There we go, guys. Okay, there we go. So we have a person. Let's look at the S&P 500. We have a person in the comment section below who is exactly what most people are doing right now, right? When the market is in an upward trend, they say the market is about to crash because I think it's going to crash, because I think. But hang on, the market, you say the market's going to crash. Why is the market going to crash? Oh, because of the bad number that came out. What was it going to crash? Oh, because of the banking crisis. All that stuff's been happening this entire year. Why has the market been going up for? Oh, but it's going to crash. Yeah. So many. I've had people message me that exact same thing this entire year, and they've been short in the market the entire year. Guys, don't make life complicated for yourself. If the market's in an upward trend, just go with it. Make life easy for yourself. No, I'm gonna be the big man. I'm gonna try to pick the top. I'm gonna try to capture that next big move down. FOMO. If I don't get in now, I'm gonna miss that next big massive crash that comes. Let's see here. So thank you, no problem. Hi John, how do you think about E? E. How do I think about E? Well, E right now is no one in control. If you're looking at this particular stock, this has no true trend right now. Has a low, has a lower low. It has some sort of a lower high here. So there's actually this is one stock that I'd actually stay away from. Why? Because there's no trend in place. It's overall sideways. So when this happens, I am not touching it. Why? It could go up, it could go down, right? You're guessing, you're gambling. I only wait for a market that's actually in a good trend, and I'm looking to jump in on that. John, how do you think about? How do I think about? Very EXK. EXK. Well, lower high. EXK is now in a downward phase. It broke that low. We now made a lower high, now lower low, and now we're down. So right now, sellers are. It actually started to make a high low here, but then the sellers came back in straight away and knocked it down. So down, down, down. EXK. NEM. NEM seems so weak compared with. Let's have a look at NEM. Yeah, you're right. You're right. There's actually NEM's in a bit of a confusion state here right now. So we have this high, a lower high. Now we have another lower high here. We did have a higher low here, and then now another low here. So this one here. What was the word you used? Confused, right? Seems weak. Yeah. Well, it's not really weak because we're not in a strong downward trend. But again, it's very, very, very. in a good strong trend at all. So yeah, looking at like some of the actual mining stocks that I like are things like gold, Barrick Gold. This is one of the stocks that I own personally, guys. I'm not telling you to buy it right now. I got in down here where this pink line is, but I'm not telling you to get in. I'm not recommending this. This actually could just go straight down and be a losing trade. So I'm not recommending this at all to anyone. I'm just saying that this is one of the stocks that I personally own. But it could be a losing trade as well too. And this here is a buy and hold for 5 years, not buy it and if it goes down 5%, I'm going to freak out and do a nugget in my pants. No, let it go. Hey John, how you been? Hey, Mr. John Wayne. Fantastic. How do you anticipate your trades? Do you keep a watch list of buy stocks, price alerts that you use at day trading? During trading day? No, David. If I'm looking at the actual US, you're talking about the US stock market for me. I look at the last hour of the US stock market. I'm looking at the daily charts, and I have a scanner that helps me identify the trading setups that I look for in my rules. So I have a scanning process that helps me do that. So no, I don't sit in front of the screen the whole day. It's really like half an hour, maybe an hour maximum. That last half an hour maximum of the US stock market close, and then I'm running my scans and I'm looking to get in today and I'm looking to hold it for a few days or sometimes up to a few weeks, 2, 3, 4 weeks or more. So how do you determine where to put each stop loss? Based off my rules. Done money? Based off my rules. Firstly, you need a good setup first. And then from that setup, you know where to put the stop loss. Oh, look at Mike. Look at this here. So guys, the stock market is making higher lows here. We're in a very strong upward trend. But Mike says quadruple negative divergence is the strongest sell signal in the technical analysis. You need to learn. Whoops, guys. I got it wrong. I've got it wrong, guys, this whole time. I know when we look back through history that the best type of trades are going to be with the trend and after a pullback. And that's going to give you the best chance of doing really well long term. But I'm sorry, guys. I've had it wrong this whole time. I need to be looking at quadruple negative divergences because that negative divergences is surely going to play out. Okay. Oh my goodness. Quadruple negative divergences. You know what? Let's go back to here then. Let's go back to here. Let's actually have a bit of fun here. Uh-oh. Negative divergence. Got negative divergence here as well too. What else we got here? Negative divergences. Look at all the negative divergences through there. Oh no. We have negative divergences here. Oh, look at the negative divergence. Oh no, it's so not good. Negative Negative divergences right there. Negative divergences right there. Negative divergences. Oh, that's a triple negative divergence. Meanwhile, the stock market's gone through one of the biggest bull moves you've ever seen. And you're trying to short a bull market? Come on now. Come on. I need to learn. I think you need to change your nappy. Come on, man. Seriously. Look at the facts for what it really is. If the market starts to be in an upward trend, you're going to be right 1, 2 times, maybe 3 times out of 10. And just like this big bull market that happened for a couple of years, there's hundreds of negative divergences. I need to learn. Okay. I guess Mike is short the markets right now. So he's looking for any reason that the market's going to go down. He's the 90%er who fights the markets, goes against it, and hoping the market's going to go down now. Mr. Mike. That's okay. That's okay, Mike. You will learn one day. You'll remember this conversation, because if the market does continue to go up from here and we do get a breakout, you're going to be like, oh, but negative divergence, blah, 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 blah. Market is rigged. No, it's not. You're just a shit trader. How would one enter a trade for NVO? Well, actually, due to the fact you actually even asked me that question, says you shouldn't even be looking. If you don't even know what you're looking for, then how do you know what to find? If you don't know what you're looking for, then how do you know what to find it? So firstly, I guess your job, right, is to know what you're looking for. Because you're saying, how would one enter on trade NVO? I've been waiting to get in, but it feels like it just keeps going up. Well, I wouldn't be entering NVO right now, because this is now more like bubble territory. And we're probably likely to get a very, very strong pullback out of this very soon, because now we've gone up way too much with very little pullback. So, no, I would not be looking, for me personally, no way I'll be looking for NVO. This thing's gone up way too much. Look at last time we went for a very big move for a while. Look what actually came afterwards. Now we're doing the exact same thing. It's gone for a very big move. What's probably going to come next? Sideways or a very deep pullback? This is the wrong time to be looking to buy something after the market's already gone up. This negative divergence occurs before every major crash like it did in 2021, the pattern of the current stock market. Okay, yep. Okay, so Mike's talking about the negative divergences still, ready? I just walked you through probably a couple of dozen of negative divergences that happened through the whole bull market of 2020 and 2021. But it happened at the top of the market. That's where it's probability, my man, probability. So when the market crashes 20% in the next few months, what are you going to say? Well, I'll probably be short then, Mike, right? Why? Why will I be short? Let's see. That's right. Because I'll be trading with the trend. Oh my goodness. Let's actually, you know what? Let's actually do this here. Back in 2021, back in my day, there was, you could look at any market you want to look at, and the Nasdaq, the Dow, you could do it. Let's just use the S&P 500, right? So right now, you're like, when the market goes to 20%, what am I going to say then? I'll probably be short, because then the market will start to go back into a downward trend. Because if we go back at 2020, what actually happened? That's right. We had a low. We had a higher low through there. Then we actually ran down, made a low, and then a lower high. And that was the start, because we stopped making higher lows. And then as soon as it made this lower low, lower high, that was the start of the downward move. Oh my goodness! Are you telling me that all I have to do is wait for the market to stop making higher lows, and then that's when my warning bells are going to say the market is no longer an upward trend? Oh my goodness! John, I think I'm onto something. Wait for the market to end the trend first. Let the market end the trend first. Now, what does an end of trend means? It simply means that we no longer make higher lows. So if it actually breaks a low like it did here, guess what? That would be the warning sign for you to say you should no longer be long the markets. But if it doesn't do that and the market continues, like Mr. Mike, who needs to change his nappy, continues to make these higher lows, don't fight it, because it's making higher lows still. But as soon as it actually breaks these lows, we're no longer in upward trend. Let the market do the talking. Let the market do the talking. So if that happens, guess what? I'm a trader. And if that happens, the market's going to start to step down. It's not going to go straight down 20%, right? Because what you're probably thinking now, Mike, and this is what most people are thinking right now, is you're thinking 20%, right? This is, that's the 20% there. You're thinking the market's just going to go straight down like this. It's going to fall off a cliff and it's going to go straight down like that. You are deluded, my man, because you are not seeing reality of even in, look at this here. Even when the market does go down, it probably takes many months and many weeks for that to happen. Many weeks and many months for that to happen. So talk to me about the narrow breadth of the markets. That doesn't concern you? 7 to 8 stocks pulling the market. Again, Mike, you're making it so complicated, man. Like, obviously, Mike is short right now, like a lot of people are right now, and he is looking for every evidence that the market is going to crash. And a person who trades the market now for almost 20 years and does really well from it. And again, I actually trade live, and I have like a group that I actually trade live in front of. They can testament to this. I do quite well from trading. So that's based off what your thoughts are, man. You're thinking too much. If the market's making higher lows, go with it. If it stops making higher lows and we start to go to a downward trend, go with it. That's as simple as that. Would I touch GTII? GTII. Would I touch it? No, I would not touch it. Why? Because I don't see my trading set up there. So I would not touch it. That's me. Again, guys, if you're talking about trading opportunities, I'm looking for my trading setup. They will keep the market where they want it as long as it's in their best interest to do so. Focus on the markets, guys. Remember this thing, okay? Mike, just remember this thing, okay? The big guys are the people that push this market around, not me and you. So if the big guys right now are starting to push this market higher, why not just go with that? Oh, who would have thunk it? That's okay. Just go with the markets, guys. And that's what trading's all about, right? Trading's all about, like, Mike right now is trading something that may happen once in 3 years. That's not trading. But by the way, it actually hasn't happened in once in 3 years, because I just went back to the last big bull market and there was like 15,000 negative divergences that didn't work. But I was right once. I went short 20 times and I got it right once. Yeah. Take that to the bank. They take your house. How much does the option move when the trade with weekly momentum? I'm not sure what that question is, John Wayne. I'm not sure about what you mean by weekly momentum. Firstly, I would never take a trade based off the weekly chart myself. Especially when it comes to options, I would never use that. Looking for an entry on Noob. Why Noob? Yeah, not me. I saw this one here, KRONZ, but then there's a massive level of resistance and support down here. So it may have a little bit of room to run. But one of my rules, and it's probably up a bit more from there, it's probably up through there somewhere. One of my rules is that, yes, I'm trading with a trend, trading after pullback. But one of my rules that I have in my checklist is I never trade a trade that's always getting very close to a level of support. But yes, you are. Actually, that's not even. That's NDS. Noob. Is that right? NOOB. I'm looking at a different stock here. Anyway. Yes, I'm short, and I'm down 8%. When it crashes, I'll be up more than 50%. There you go, Mike. There you go, Mike. Okay, so I want to ask you a question. The way that you're trading the markets right now, obviously, right, the quickest way for you to get to where you want to go in any endeavor, whether it's becoming fitness, or you want to do bodybuilding, or you want to do competition, right? Maybe you want to do a shooting competition, right? What do? Right? You go find mentors, you go find people who are doing it, and then you go follow them. If you are, what you're doing right now, if you're doing something right now based off what you just think and not actually modeling someone who's actually doing it for a long time. I've been trading the markets for almost 20 years now. This is actually 19 years myself. If your foundations right now, if you're entering your approach in the market based off just what you think and not based off a proven history, a proven strategy that's going to work long term, not just once in a while, then you're doing a good job. But if you're basing it based off just what you think on it, and you are not basing your success or your approach to these markets based off modeling success for long-term success, not just once in a while, then yeah. So you said that when you're going to make 50%. Okay, Mike. Okay, cool. Okay, now this is what I want to say. So let's just say the market does do that, and you make you 50%. Yay! He made 50%. Woo! All right? He made 50%. All right? It'll be up more than 50. Yay! All right? Gets a clap. He's up 50%. Now, Mike, for the next 3, 4, 5 years, I want you to do the exact same thing so you can make money every single year. Can you do that? Oh, wait. No, I can't. Because it was just a once in a trade. It was just a lucky trade. It was not something that you can repeat year after year. That's the point I'm trying to say there, Mike. You're not doing something. You don't have a good solid foundation of making money consistently long term. It's not about, whoa, I got it right in the market. Say the market did go down. Okay, cool. Now go tell your wife next month that there's not going to be any more trades for probably now maybe another 6 or 12 months before you get a triple, quadruple negative divergence, which happens so many times in big bull markets. That's what I care about. And that's what I teach my clients is what are the patterns and the strategies that I can rely on throughout the year. Yes, I know there's going to be periods where I'm not going to have not many trades, and that's just the way trading is. But I want something that at the end of every year, I know I can make money repeatedly from that thing. That's what I care about. And on the foundations of what you're doing right now, you're going against what the market is doing. The market is actually in an upward trend, and you are going to be wrong. Just the nature of how the market's right, you are going to be wrong 7, 8 times out of 10 because you're going against what the market is telling you. And the market is saying, hey, we're in an upward trend right now. So that's what trading is all about, guys. Okay, that's what trading's all about. Oh yes, I made money. Yes, it's like that's what people say to me. John, give me the next hot top TikTok stock, the stock that's gonna go to the moon. What is that? It's like I don't know. Oh, but one thing I can tell you is I can tell you if you follow this pattern repeatedly, that you can do well for the rest of your life, not just once in a while or trying to pick a top in the market. Don't try and pick tops in markets, guys. Leave your ego at the window. Flip it on its head. So, Mike, why is the stock market going to crash now? What's the differences from now compared to the rest of compared to the whole year so far? Everything that's out in the market right now, high rates, inflation, GDP, blah, 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 blah. That's all been out in the marketplace. Why hasn't it crashed already? Something to think about. If you're willing to answer, I'm not sure. There are big cycles of YouTubers, traders, teachers. Probably you have a few favorite of for different reasons. Which is your favorite and why? No, Thomas, no. YouTubers, traders, teachers. No, I don't have a few favorite. Because Thomas, guess what? When I trade the market, I trade based off my system and my strategy. But if I'm looking for the big cycles or the big stuff, probably Ray Dalio, and Mike Maloney. Now, I'm studying their material to understand where we are in the big cycle of things. Not to say there's going to be a big crisis right now and the market's going to crash, so I'm looking to go short the markets. No. I'm looking to learn from them. I'm looking to them to understand the big cycle of things, where we're going over the next 3, 4, 5 years or more. So that's what I say. Narrow breadth of markets, big boys pushing it up, 8 stocks, blah, blah, blah. Thanks, John. Very useful. No problem. I base my trade on technical analysis. Really? The foundations of every technical analysis is that the trend is your friend until the end, right? We know that's probably the best saying out there. Oh, that's right. Screw that. Oh, so you trade based off current global economic conditions. Oh, really? Oh. So that tells me, let's actually do this something here. So that tells me that you were the person that when they announced the lockdowns, which was actually right here, this is right here is when they announced the lockdowns on the markets. So they right? This here. So you're the person that waits for economic conditions. Okay, so lockdowns so bad, the market's going to crash. This is when they announced the lockdowns. This is when the whole world went lockdown here. But hang on a minute, that was the bottom of the markets. We are going to crash. You remember me when that. Flow with the market, Mike. Flow with the market. If you want to trade the markets for income throughout the year, right? Trade the markets. Right? If you're a trader and you use technical analysis. Anyway. Thank you, John, for the useful imports. Could you please look at credit default swaps for the US and share your thoughts? Thanks. That's not my forte, Mohammed. I'm not really, that's sort of something that I'm not really credit default swaps. You can actually go there if you want, Mohammed. But I'm not really, I'm not experienced in that area, so I'm not going to really comment on that one. So, really, Mike? Well, Mike, I'm sure the technical analysis and the conditions were really bad at that time, so I'm pretty sure you shorted that time. That's okay. Anyway, guys, as you can see, guys, there are some people out there, and I was once one of them, okay? So I understand where Mike is right now. People out there right now are short the markets, and they're going to find any reason of why what they're doing right now is going to be right. They're looking for confirmation bias. I used to do it myself. And they're looking for confirmation bias that what they're doing is the right thing. Right? And then, and the thing is, guys, is that once again, guys, you want to make sure that your approach to the market is something that you can repeat for the rest of your life, right? Have a systematic approach. If you trade the market, you use the patterns, you use the charts, you have a system, you get in, you get out, have some losses and so on and so forth. So, but unfortunately,